I bet. So basically, let me go over to Hard Money Scanner real quick, see if there's any. I don't think there's anything on here, but I'm gonna go ahead and check. Okay, bet. I did recognize the name. I just wasn't 100% sure. All right, bet. Appreciate you for hopping on the call. I'm gonna handle this as if we still got 100 people on the call. That's one thing I did learn. Um, I just got to be consistent, because to be honest, I can't feel any kind of way about people getting on or not getting on, because I've never actually been consistent with these calls. So I know as I maintain consistency, people will consistently get on. But we usually have like at least 10 people on here, so I am a little surprised when it got one. But like I said, I'm gonna handle you just as if there's 100 people on the call. It'll keep me sharp as well too, and just so I make sure I keep doing these calls, because I really want to be able to do these calls as consistently as possible. And we've basically done these calls every single day this week outside of Sunday, because we've had setups. Yeah, so there's not really anything happening on. I mean, let me look at Euro AUD real quick. Yeah, it's not really too much going on here. All right. Give me 1 second. All right, bet. So, my bad. I was responding to a text message. So let's go ahead and yeah. So it's not really anything on there. I don't think, yeah, the DeLorean that was called out wasn't really anything worth looking at. Um, let's see. All right, but so yeah, we just gonna go ahead and dive into that one setup. Let me look at the other ones I have marked up. I'm pretty sure, yeah, none of these are anywhere close. Um, yeah, this one, I might as well just erase this one. This one's not gonna happen. Yeah, I'm gonna just erase that. That's not gonna happen now. All right, cool. Go ahead and take that off the list. All right. Okay, so AD Chef. Let me know. First of all, let me know. Is your name pronounced Marquise? Marquise. Let me know if I'm saying that right. All right, bet. Were you on the call yesterday by any chance? Yes or no? All right, bet. Um, so yeah, so I mean, if you're on the call, I already talked about this, but I'm gonna go over it one more time just for the purpose of the video, and basically just to kind of speak on. Oh yeah, my bad. Hold on, we got another person on the call. I bet. Got my boy Ignatia. Yeah, I can go ahead and unmute y'all because there ain't really nobody on the call. Give me 1 second. My bad, G. All right, bro. You can unmute yourself. Ignatia, you can unmute yourself too if you want to. All right,
Yeah,
bet.
you hear
Uh,
me now?
yeah.
Okay, bet.
All right. Cool. So, like I said, this call ain't gonna be too long in nature. Call ain't gonna be too long. Just because there's really nothing to talk about. It is a Friday. Fridays honestly just don't yield a lot of opportunities in general. It's the end of the week, and it's Christmas week on top of it. Look at all this. All these people want to hop on now. That's too funny. That's too funny. All right. So yeah, so it's not gonna be the longest call. Literally, I already looked through the market before I got on the call. All the setups that I have marked up are honestly nowhere near getting activated, and they haven't called out any DeLoreans. The harmonic scanner doesn't have anything, and really the only thing I can, talk about is AUD Chef. But like I said, I want to be able to do a call every day that we either are in a trade or we're looking to get into a trade. So since we're officially in a trade, even though I spoke about the setup yesterday, I at least want to be able to I at least want to be able to, update y'all on basically where the setup is currently going, a bias, kind of see what we look for. And I mean, to be honest with you, this is definitely going to be something that looks like we're going to be holding it to the weekend. Hold on. All right, but so basically AUD Chef, I'm gonna just break this down. Honestly, I'm gonna just go back over this whole thing in general. Because I don't know out of all three. Well, I know Marquise was. I don't know. Ignacio, were you on the call last night or no?
Yeah.
Okay. I'm gonna still go over it in general because, like I said, I am posting this on YouTube. So, even though I've been talking a hell of a lot most of the video. So yeah. So let me just go back over this one more time in general. Nothing wrong with repetitiveness, especially in the market. So, kind of going back over the setup. So basically, what I said from the beginning was, we overall saw like the bias of the market was a downtrend. So, for the most part, one of the things I like to be able to pay attention to is I'm going to look for the overall trend. Once I determine the overall trend, I'm going to ask myself, am I looking to trade with the trend or am I possibly looking at a counter trend opportunity? So in this specific situation, I was actually looking at a counter trend opportunity. No, I'm tripping. I was looking at a trending opportunity because we're looking for a sell in this overall bearish. So, once I kind of had the bias that the market is in the overall downtrend, which anybody can see because it's just been falling off. Once I scroll in a little bit, let me see. We actually got two DeLoreans. I got caught up. Let me see. Let me check this real quick. Do, 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 do. That's trash. And that is trash. All right. So on AUD Chef, one of the things I like to be able to look for is, as you guys know, I like to be able to look for, the extremes being hit, literally the same thing I speak on every single call. So one of the things that you could look at is every time, you see that white line come outside the box, you can see the same thing happen on the market. You saw it come out the box over here. Man, all these people want to hop on late. Not tripping. All right, you see this over here. And then this is, essentially what I was looking for to happen in this area over here. So each one of these boxes, you can see this one obviously reacted aggressively. This is what we would like to see in every situation, but obviously this is not going to happen in every situation. But the concept of what you see here is what we would like to see. The market, the momentum is getting weak to the downside, ended up peaking outside the purple box. Whenever it came back in, the market reacted very aggressively to the upside. Same thing over here. So you actually had about 3 different touches up here. The market eventually created a peak up here, and then it did react. As you saw, it came out the purple box and then dipped back in. And then finally back over here, you can see the market started showing 3 different instances. So you have 1, you have 2, you have 3. So we had 3 different instances showing that the market might be getting exhausted. So this would be 1, this would be 2, right? And then this would be 3. So these are all going to be the points of emphasis that we're going to be paying attention to. So in this relative range, we're focused on this because this is where, we initially got our entry from, which is this reaction happening right here. And then this was the market pulling back to the area that we were looking to actually get in, right? So the other thing that I broke down is we wanted to be able to, use our fib. So the fib is something, I'm going to be honest with you. I'm so glad I started using the fib because, to be real, I used to purposely not use the fib because I tried to convince myself I didn't need it, and that was just 100% cap. In the 2 years of me trading, I've only honestly been consistently using the fib for probably 4 to 6 months of the 2 years, which is pretty sad. But, you know, everybody has to come around and figure out what is their overall style going to be. So I honestly feel like the fib isn't like a style. Like, I just feel like in general, like you should be using the fib in some way, shape, or form, just because, I mean, it's by far one of the most generic tools to use in trading. And it's definitely one of the simplest and most effective ways to be able to, you know, take advantage of trending markets. So with this fib, as I said, you guys always want to be able to, you know, locate and be able to train your eyes to see, okay, you want to focus on where the impulse move starts at. So usually you want to start from higher time frames so you can actually get a good gauge of it. So technically, it's two different ways that you could use the fib. You could either try to say, okay, I'm gonna do the fib from here, I'm gonna do the fib from all the way up here. But personally, in my opinion, trying to do the fib from all the way at the top, even though in your head you might be like, okay, this was the highest recent point, this is the lowest recent point, so this will be my fib. I personally wouldn't use it like that, just because you want to use the fib from the most recent impulsive move. So if you actually look at this chart, the most recent impulsive move is obviously here, right? Which continued down, created this low, and then started retracing. So that's why I would focus right here, right? Because this is where the last impulsive move initially started. And then this is where it created the bottom before it started retracing. So within this move, we also can see, you know, as I kind of go up a few more time frames, we have a lot of imbalance up in here. So obviously, you know, if you're new to, you know, institutional trading and things of that nature, imbalance is basically just going to be a void or a gap in the market, essentially meaning the market moves so aggressively in a direction, it did not evenly balance price out. So what the market is always going to do, is just a matter of when it's going to do it, is it's always going to come back and fill in that imbalance. It may not fill it in 100%. It may fill it in barely. It may fill it in 50%, or yeah, it may just fill it in all the way. So any type of reaction that you get within an imbalance could be good enough. Like, the market does not always have to fill the imbalance. It doesn't even have to go to the 50%. The market simply dipping into an imbalance in a way can be valid enough for it to do what it feels like it needs to do. So reason why I'm bringing that up is, if you look at this gigantic wick that you see right here, so if you look at this gigantic wick that you see right here, this wick is reacting inside this imbalance. As you see, this wick also came above these relatively equal highs. So if I were to actually, let me get rid of all this. So if I were to actually take this and do it like that, this trend line tool, it took out relatively equal highs. So what exactly do I mean by that? Even though this high technically took out this high, but relatively equal highs is a concept of, you know, some people may refer to them as double tops, double bottoms. But basically it's like built up liquidity. Liquidity is going to be, you know, the concept of traders having their stop losses in a certain area in a large volume. So the market might be like, okay, there's 1 million people that have their stop losses in this specific area. So eventually they're going to make their way to that area so that they can take your money. Okay. So whenever you see two areas, right, that are relatively at the same spot, those are considered equal highs or equal lows, which are basically a pinpoint area that the market might want to come to. So that can be an area you can wait for the market to react off of, or if you're already in a trade going in that direction, you can look at that as like a target or a take profit area. What I'm pretty much looking at this as is a liquidity sweep. A liquidity sweep is basically what I just explained. Whatever the market is going to make a sharp move above or below a previous high or low, and then it is going to immediately reverse in a complete opposite direction very aggressively. So it's obviously a lot easier to see on a 1 hour time frame. So as you can see, the market peaked above this area, dipped into the imbalance, and then very, very aggressively dropped to the downside. So one of the easiest ways to be able to, confirm that it's a valid liquidity sweep is an immediate move in a complete opposite direction once it's come above that high or below that low. And that's basically the easiest way to put it. So me simply seeing this reaction is why I felt like this would have been valid, you know, for a liquidity sweep. And with the liquidity sweep, once it does this move, the concept of it is you want to be able to get a retracement to be able to possibly take the continuation. So now that we got that out the way, the next thing that I want to be able to focus on, as I'm going back to it, was if we pull back out this fib, You know, in order to be able to have a bias, a lot of times a fib is going to give you that extra confirmation. So if I'm looking to take a continuation of the overall downtrend, I want to be able to obviously make sure the market is at a discounted area before I hop in a trade. What do I mean by discounted area? The concept of the fib, because I haven't actually spoke about this on any of these Zoom calls, and this was the easiest way that was broken down to me. A fib is basically like a discount. So say for instance, right, you go to, I'll give you guys a perfect example. When I used to work at Walgreens, I worked at Walgreens basically right after graduation of high school. That was my second official job. My first job, I was working through co-op. I don't know if any of y'all had a co-op program at your school to where you go to school half the day and then you go to the job that you got through the school the other half of the day. So I was working at Shell Chemical Refinery out here in Houston. Great job. I mean, shit, back in 2010, 2011, I was making like $10 an hour. $10 an hour in 2010 and 2011 was adults adults with kids, and in a lot of instances weren't making no damn $10 an hour. So for my first job, of course, I thought I was rich. You always think you're rich whenever you're making a little bit more than the average person, but obviously I wasn't rich. Anyways, that didn't have nothing to do with what I was trying to say. When I was working at Walgreens, there were customers that would always specifically wait until the day after each holiday so they can get everything on clearance. Because think about it, the day after Christmas, nobody is still trying to buy Christmas items, ornaments, wrapping paper, the Santa Claus. Nobody's trying to buy none of that. So they still got to get rid of it. Otherwise, they're just going to take a loss on everything that wasn't sold. So what do companies do? That's why they put it on clearance. So you'll have people that'll literally wait until the day after Halloween, the day after Valentine's Day, the day after St. Patrick's Day, the day after Easter to come in, buy all the candy, buy all the stuff because everything's 50%, 75% off. Now you got to ask yourself, right? Would you rather pay full price for something or would you rather wait for it to get on discount? Obviously, that's a rhetorical question because everybody obviously would rather get something on discount. So the purpose of the fib, as you look at these levels, look at this as it being marked down by that much. So what I mean by that, this would be equivalent to 61% off, 71% off, 78% off, 88% off, right? So obviously, you know, you've seen 50% off, 75% off. You've probably never seen anything 80% off because that's kind of like a random number. But just imagine, right? Just imagine if every time you went into the store, you had the opportunity to get something 60 to 80% off. That would be amazing. So this is the same concept of the fib. They call it a discount or being at discount because if you get that retracement into the fib, the concept of it is you're getting it at a premium or at a discount level, which makes more sense for you to be able to take the trade. Now, it doesn't mean that you can't take a trade if it doesn't pull back to the fib, but it does mean percentage wise and accuracy wise, your results may vary just because, you know, the fib is, it was statistically created well before most of us were even born. And it's something that's been used in trading, as far as I know, damn near forever for the most part. So whenever you get this retracement back into the 61.8 to the 88%, this is whenever you can start, you know, having your eyes get all big because you know that, okay, it now would make sense for me to start looking for an opportunity because I know I'm taking this opportunity at a discount. Okay. Now, the next thing that I was looking at is you always have to be able to make sense of, okay, if I'm going to take a buy or a sell, before you even get into the trade, which is something I haven't spoke on too much, is because, to be honest, from me seeing other educators teach, I'm not 100% sure why. I think it's just because it would probably be so much more additional time to do a call. Very few people go over their targets. What do I mean by that? So usually when you get on a go live session or a Zoom session of people speaking of a trade, they're usually going to tell you the bias of the market, the direction they're looking to trade, where they're looking to get in, and you know where they're going to place their stop loss. Most people aren't breaking down, I'm looking to have my take profit be put here because of X, Y, and Z. They usually don't do all that. They'll just say, okay, TP1, TP2, TP3. They don't usually give you a reason as to why they're putting their take profits in that specific area. Now, the reason I say that is because what I'm about to speak on is the concept of whenever you're getting into a trade, you need to also have a target in mind. So you never want to get into a trade and then try to figure out where you're targeting. That makes absolutely no sense. So before you get into a trade, which is why every time before y'all see me call something out, I already have everything marked up because I don't want to, you know, spend all the time on the call finding something from scratch, you know, doing all that because it's just going to take so much more time because I'm not it's harder for me to educate while I'm trying to focus on marking something up. So that's why I like marking up stuff before I get on the call. And then I can just focus all my time into just explaining why I marked it up. So you want to be able to have a reason as to why you're taking a trade, because you need targets. Okay. So targets, honestly, in general, should be based off of previous market structure. So a lot of times whenever you guys see me place my targets, I'll give you guys an example. So if you look at AUD Chef right now, right? My first take profit is not what's the word I'm looking for? It's not a coincidence that I put my take profit 1 here. So the reason why I put my take profit 1 here is because this is a previous structure, right? This is going to be a previous low before the market continues to go higher. So whenever you're looking for targets, you basically, in my personal opinion, basically your target should just be based off of previous lows and previous highs. As simple as I can put it. Now, it does take time to be able to pick the right ones, because sometimes if you're not what's the word? If you're not if you haven't been trading long enough, you don't have enough experience, you might not know what take profit is too far. So some people, whenever they're targeting take profits, they might not realize the market might not go that far. So you need to be able to always make sure, at minimum, when you're setting your take profits, take profit 1 in your head should be a guarantee. Whenever I trade, my take profit 1 in my head is basically a guarantee. Take profit 2 and take profit 3, I would like them to continue going in that direction, but it's not always going to work out that way. We know, statistically speaking, take profit 1 is going to be hit. It has to get hit first before it goes to anything else. So statistically speaking, in my personal opinion, the most important take profit should be take profit 1, because it's very rare that you actually see anybody in general call out a trade and all the targets get hit. That usually doesn't happen. All right. So if you're calling out a trade, it might hit TP1 like 75% of the time. And then the other 25%, you might get lucky and it hits TP2 and TP3, right? For me, same thing like anybody else. A lot of times TP1 is going to get hit. The market is going to reverse and hit break even. But that's why you want to make sure you have a specific designated area for TP1, because what can also happen is if your take profit 1 is not in a good spot, you'll just end up getting into a trade, holding it for a while, and it pulling all the way back, and you didn't actually make any money because your brain is like, I don't even want to take partials until it hits my take profit. So it leaves you in a weird spot. So that's why I put in a lot of effort to be able to start making sure I know exactly where I want to put my take profit. So I'm not in a situation to where I hold a trade for like a whole day and then it doesn't even hit my take profit. It ends up pulling all the way back and I didn't make no money. It's just like I was in a trade for a whole day, literally for nothing, right? So what is the next area that you could look for? Now, it's the reason why I didn't put the next one like exactly right here, pretty much based off of risk to reward. But for the most part, this also could be a target area. So this is like another level of structure. So you could also look for this to be a target. The reason why I'm not targeting all the way down here is because, truthfully speaking, I feel like this market is still going to be bullish just from this large impulsive move. It did come up and break this structure. So one of the things that I personally think whenever I was looking at this setup is I'm thinking that this sell is really just a retracement back into the fib level to still continue higher. So what I was wanting to see, because the trade obviously hasn't finished yet. It is, yeah, obviously, it's barely in profit. Another funky trade like yesterday. So yesterday we did hit stop loss, which is cool. This one was not, this one was kind of similar. So we had a very, very deep pullback, but it did not hit our stop loss. That's the biggest thing. So the thing I always tell people, this is a good example to be able to show you guys. And this is something I'm guaranteeing all of you guys have experienced. This trade came literally 5 pips from stop loss. Okay. Nobody's broker should have taken him out the trade because the spread on AUD Chef is probably like a pip or 2. So nobody should have been manually taken out the trade, right? But you might have freaked out because if you're looking at your phone, everybody knows on MetaTrader 4, it glows green whenever you're within 10 pips of your take profit. It glows red whenever you're within 10 pips of your stop loss. So at the time that this was happening, if you would have been looking at MetaTrader 4, you would have seen that little red bar pop up and your heart was probably racing. But I'm here to tell you, the reason why you put a stop loss is because you need to either let it get hit or just let the market do what it's going to do. Think about if I would have just taken it upon myself, because I know how the brain works in the market. Your brain, especially if you're looking at this, because you got to think about it. Look at how this candle closed, right? But if you're looking at it at the time you're looking at it, the body of this candle is all the way up here, right? You're not knowing that it's going to close back down here and it's going to be a big ass wick. If you're looking at it in real time, you're freaking out. So your brain is not going to be like, I'm gonna just hold it. If it hits stop loss, it's gonna hit stop loss. That's not how you're thinking if you're looking at it in real time. In real time, you're gonna convince yourself, I'm gonna just go ahead and close out the trade because it's about to hit stop loss anyway. Trust me. I've been through every emotional situation in the market in 2 years. That's exactly how your brain is going to work. Man, it's going to hit stop loss anyway. I'm going to just go ahead and exit out this trade so I don't have to take the full L. And then you come back later in the day and you see that it came all the way back down to entry and now it's in slight profit, right? This does not mean that this market can't still come back up and hit the stop loss. That's not what that means. But what it means is, even if you close out the trade, I mean, at least maybe wait to close out the trade until it gets back to entry. But the concept of exiting a trade before it hits stop loss, you're literally losing money for absolutely no reason. Because if your stop loss never gets hit, but you got out the trade, it's like, what is the whole purpose of getting in the trade in the first place if you're not even gonna, you know what I'm saying, let the stop loss do what it's there to do. So these are reasons why you guys have to have confidence when you take your trades. You also have to let the trades breathe. Yeah, I was just like anybody else. I wasn't comfortable whenever I was looking at my phone and I saw it was glowing red. But at the same time, I told you guys, one of the biggest issues I used to deal with was manually exiting trades, where I used to be the king. Oh yeah, shout out to Marquis still in the trade. I used to be the king of manually exiting trades. Okay, the king of it, literally. It was something I'm not saying that like I was profitable. I was like the king of it. I used to be the dude to get out the trade, see it start going in my direction, get back in, and pull back. I get back out, and I'm like, man, I should have just stayed in originally. So now in my head, especially because I don't over leverage anymore, I'm literally just risking 1%. I don't even risk 2%. I risk 1%, right? I'm like, okay, Tyree, if you're gonna get into the trade, there's no reason why you need to manually exit. You just either need to be comfortable taking that L, or you need to just let it play out and stop checking your phone every, 10, 15, 30 minutes and psyching yourself out. And that's basically what I do. That's why I set alerts. I don't really check my phone that much. I just set alerts. Whenever I get an alert, that's how I know to go back and check it because something significant happened. So I'm saying all that to say, these are basically, like all the different things that I'm thinking about going into the setup. So I kind of explain, the take profits and things like that. Keep in mind, like I said, these fib extensions also serve as target areas. So all these can be potential profit areas, which is why you see the final target area is based off that 61.8. So for the most part, kind of like I said, at this point, I have absolutely no idea what's going to happen. Obviously we hope for it to continue dropping, but we really don't know. It is going to be the weekend as well too, so we are going to because I definitely, if it's going to hit stop loss, I don't see it happening before next week. So I don't think we really have too much to worry about. Hopefully the weekend, hopefully when the market closes, we're still in profit, because what you don't like, one of the most uncomfortable things is the market closing over the weekend and you're in drawdown. Because if you know anything about when the market opens up on Sunday, a lot of different things can happen. The market can randomly gap in any given direction. Ain't no telling how big spread is going to be when the market first opens. So you definitely would like to be in profit, no matter how much profit whenever the market closes. Being in drawdown when the market closes for the whole weekend is pretty uncomfortable. I'm going to be honest with you. Something else I want you guys to be able to take into consideration, which I don't do, but I want you guys to be able to figure this out, because this is a really big dynamic of traders. You're going to be one of two people. You're either going to be the person that holds a trade over the weekend, or you're going to be a person that closes a trade right before the market closes. Okay. Reason why I say that is because a lot of people feel uncomfortable with what I just said. A lot of people don't like holding a trade over the weekend, not knowing if the market is going to randomly gap in any given direction on Sunday when it opens, because that's definitely a reality that could happen. On top of spread. Spread is outrageous when the market opens on Sunday. Like it can be any goddamn thing. Your stop loss literally can get hit and the market is nowhere near your stop loss, but that's because the spread is so high. So it's reasons like that that traders, a lot of times, especially a lot of the seasoned traders, it doesn't matter how much drawdown they're in. It doesn't matter how much profit they're in. If it's 1 to 2 hours before the market is about to close on Friday, they're just going to go ahead and manually exit that trade because they don't want to forget and then come back and it's like, damn, I forgot to close it. So make sure you also figure out what person you're going to be. You're either going to be the person that's like, I mean, if the market closes and I'm still in the trade, I'm just still in the trade. Or you're going to be the person that's going to be like, okay, I'm gonna wait until like an hour or two before the market gets ready to close. And if I'm in drawdown or if I'm in profit, it doesn't matter either way. I'm getting out of this trade before the market closes and the weekend starts. Okay. So that's like a dynamic I just want y'all to understand, because it is a pretty big deal. That's depending on who you ask, you're gonna get a completely different answer. But like I said, for me, what I've personally noticed is I've missed out on a lot of opportunities from exiting a trade before the market closes for the weekend. Because when the market opens back up, a lot of those trades that I could have just held over the weekend end up continuing to go in my direction that I was initially looking for. But because I just didn't feel comfortable holding it over the weekend, I basically missed out on the money that I should have gotten in the first place. So I'm okay with whatever happens when the market opens up on Sunday, because I know it's been a lot of opportunities that if I would have held it over the weekend, I would have made, the money. So this, like I said, is going to be one of those examples. We are currently, not a lot, 10 pips. It dropped for about 17 pips max. So literally nothing crazy. Nothing crazy at all. Like I said, we're just going to be really patient. It is a very, very slow moving pair. AUD Chef is a very slow moving pair, like very slow moving pair. Very slow moving pair. What does it look like on these lower time frames? So yeah, we'll see. I mean, I have absolutely no idea what's going to happen. You never know what's actually going to happen. That's pretty much it, though. I don't really think I have anything else to talk about. That's basically it. Because like I said, I spoke on this yesterday. I really just wanted to get on this call to kind of reiterate pretty much how the market is played out. Show you guys, don't be afraid of a pullback. A pullback is a part of the game. And it's another example of you would have been in drawdown for a while. So literally from the moment that the market would have hit the entry, which was on this candle, you would have been in drawdown approximately, because I don't consider this candle being in profit, because it came in profit and immediately went right back in drawdown. So you would have been in drawdown literally like yesterday, the GBP JPY trade, I think, was in drawdown for like 16 hours. This one was in drawdown for 15 hours. So literally more than half of the day, you would have been in negative every time you would have come back to check MetaTrader 4. But it's okay though. Like I said, the reason why you put a stop loss is you want to let it actually get hit if that's what the market is going to do. If the market is not going to go hit it, then you don't need to be taking yourself out the trade just because you're getting emotional on a really deep pullback. Okay. Yeah. Sometimes the market is going to pull back more than what you feel comfortable with. But if that pullback doesn't result in your stop loss being hit, then just chill out, put your phone down somewhere, and just let the market ride out. That's also another reason why you guys want to be able to start making sure you add spread to your setup. So the thing that I do, because one thing that a lot of people F up with is they'll put their stop loss literally right at this high, right? Now, if you put your stop loss literally right at the high, something like this coming this close, depending on how much spread is on this pair, this could have possibly taken you out. So if your stop loss would have literally been like right here on top, this coming this close to this high, depending on the spread, it possibly could have kicked you out the trade. And that is more frustrating than anything. So I purposely always add 2 pips of spread to all my stop losses. So I always initially put the stop loss at the high, and then I'll just add 2 pips of spread from that point for the specific reason that I just explained. I've had in the very beginning plenty of situations to where the market technically did not hit my stop loss, but it came close enough to where spread took me out the trade. So definitely make sure y'all are paying attention to all those things. But that's pretty much it, guys. Outside of that, I appreciate everybody for getting on the call. We will be back next week doing the same thing in the market. I will be dropping this video on YouTube. I want you guys to pay attention to my YouTube channel this weekend, because I will be dropping I really want to. I'm not going to say what I'm going to do. I'm going to say what I want to do. Because I've had too many times where I've said I'm gonna do something and I just don't do it. So what I would like to start doing is dropping at least 2 videos a day, as consistently as I can. I'm definitely gonna be dropping a video a day, but I would like to start dropping 2 videos a day. 2 videos a day, because I'm gonna be honest, like I'm ready to start getting paid from YouTube. I don't know about y'all, but I've been telling everybody that I come across ever since I started taking YouTube serious, like I would just start a YouTube channel, just figure out a hobby. Like you might like doing DIY. You might like cooking. I like cooking. I got 2 YouTube channels. Hold on. I don't even be talking to y'all about this. I got to get on my promotion type stuff. I can't be shy about promoting, right? It ain't nothing wrong with promoting yourself, especially if you're helping people out. Cause I know it's a lot of y'all that probably can't cook to save your damn life. I'm gonna be honest with you. I ain't even try to come for nobody. It's just a fact, right? I've cooked better. No cap. I've cooked better than every woman I've ever dealt with in my life. No cap. They'll tell you that. They'll tell you that. I've never dealt with a woman that cooks better than me. So if you guys do not know, I actually have a cooking channel. I've slacked off a lot. As you can see, I've literally only posted 4 videos, and all these videos are almost a month apart. But this is something else I'm gonna start putting way more energy into. Y'all probably didn't know your boy could cook too. Stop playing. I got the lasagna. I got the homemade. Hold on, look at that. I'm making burger sauce. How many of y'all make your own burger sauce? You don't even know nothing about burger sauce, right? I got fish tacos, right? You're like, damn, bro, you putting pineapples on the fish taco? You goddamn right. You don't know nothing about that. I know you don't. And then I made a Subway meatball sub. I ain't trying to come for Subway, but I'm gonna come for Subway. I don't know if any of y'all eat Subway, but if y'all do, you might want to do some research. I don't know if y'all watch the news, but Subway does not use real meat. I've seen that multiple times. They came out and said Subway uses 50% soy in their chicken. Think about eating chicken from Subway, not realizing half of the chicken is not even chicken. That's crazy, right? And then I don't know if y'all saw the news about the tuna that Subway uses. You do realize they did a sample on Subway's tuna, and they literally said there is no trace of tuna in the tuna. What the hell are you eating then? You feel me? So whenever y'all rock with your boy, you know, we making everything from scratch. I literally make everything from scratch. You know, obviously the burger buns I bought from the store, but I'm making everything from scratch, right? Everything from scratch. So I want y'all to rock with your boy on my investing channel and rock with your boy on the cooking channel. Chef Pips, you know what it is. Come on, man. We professional. I got the YouTube banner. I got the little animated picture. I got the Chef Pips on the hat. And I got the spatula. So you know I'm not playing. You feel me? So let me go ahead and drop this in the chat for y'all, because we getting rich in 2020. I'll be honest with y'all. Right. I ain't trying to be I ain't trying to be a negative Nancy, but we are going to go into another lockdown. We are going to go into another pandemic. Okay. So please make sure you guys are setting yourself up for extra income. I've been slacking on YouTube and TikTok. I can't do that shit no more. I need to go get monetized on YouTube, TikTok, Instagram, so I can have multiple sources of income. If you guys see how much money these YouTubers make, it is freaking disgusting to say all they're doing is making videos outside of bloggers who, you know, travel and stuff like that, making videos from the comfort of their home, right? Oh, she said she a mother of 5. Shout out to you, right? I respect it. I respect it. Shout out to you. And I would hope you can cook if you're a mother of 5, because otherwise you could be spending a hell of a lot of money on McDonald's and, you know, Burger King and all that other type of stuff. So shout out to you, because no disrespect to the, you know, the hot girls and the city girls of 2021, but a lot of these women can't cook. You know what I'm saying? The only thing that they can actually provide is, you know, the thing that's, you know, I'm not going to even go there, right? You know what I'm referencing. The only thing they can provide is one thing, and you can get that from any woman. It's like, you can't cook, you can't clean. Half of them don't even know how to dress. They just put on something that they're half naked in, and they try to convince themselves that it's cute. It doesn't look cute. It looks a little crazy. But anyways, though, that I kind of just went on a little bit of a tangent. But yeah, so with that being said, I'm officially done. Okay. We'll see how AED Chef ends up rocking out. I hope you guys enjoy your Christmas. You have a blessed one. I appreciate all you guys for supporting. Give me 1 second. I appreciate all you guys for supporting me. Thank you for all the people that hop on these calls. And I promise you, I'm going to make sure I stay consistent for you guys, because the one thing I struggled in 2021, I used to be really bad in general with saying things that I didn't follow up with. So I'll be like, oh yeah, bro, I'm a blah, blah, blah. And I just never do it. Oh yeah, I'm going to start posting every day, and I just don't do it. So I don't want to be known anymore for the guy, because I feel like I developed he just says shit that he don't follow up with. You know how many times I said I'm gonna do these Zoom calls every day, and I would do it one day out the week and then just, you know what I'm saying? So I don't like that, and I don't want people to look at me like that. So I promise you guys, I'm gonna be as consistent as I possibly can on the investing side, as far as YouTube, doing these Zoom calls and everything in between. So if you guys rock with me, you know, throughout 2022, I guarantee you guys are gonna see the growth. And I've kicked a lot of bad habits. I used to smoke a lot, haven't smoked for a few days. That used to be one of the detrimental things that used to hurt me. And yeah, so you know, I'm growing a lot, and I just want to be able to have 2022 be a different experience, because I've made a lot of mistakes in 2021 as far as procrastination, not following up with things that I verbally said I was going to do. And I just don't want to be that person anymore going in 2022, because like how they say, how you do anything is how you do everything. And I've been doing everything as far as procrastinating. So I just want to do everything 100%. So with that being said, love you guys. I hope you guys have a Merry Christmas with your kids, with your family. And, you know, let's look forward to, you know, the New Year's. Let's look forward to 2022, and let's look forward to you know, taking advantage of this financial freedom once and for all. So with that being said, guys, I'm gonna see you guys at the top, not from the bottom. No, I'm gonna see you guys at the top, not from the top, because the bottom is way too crowded. Peace.